So despite high interest rates, house have a reason to celebrate this week because on November 18th, Fannie Mae, one of the government organizations that regulates mortgages, is actually reducing the amount of down payment required when you're house hacking, when you're owner occupying a 2 to 4 unit rental property. So that's your duplexes, your triplexes, and your quadplexes. Why does this matter? Traditionally, conventional 3% down and 5% down loans were options for single family properties or single family properties with ADUs, but they weren't available for true multifamily properties, your duplexes, your triplexes, and your quadplexes. And what that meant is to get a lower down payment on those properties, you would have to do FHA 3.5% down. And that has some big negatives. We're talking permanent mortgage insurance that doesn't disappear once you have equity in the property, a self-sufficiency rule, and other factors that make it less favorable than a conventional loan. So what's the FHA self-sufficiency rule? In a nutshell, it says that when you buy a multifamily property that's more than 2 units, so your triplexes and your fourplexes, 75% of the gross rental income has to cover the entire mortgage payment. So what that means practically is that when mortgage rates go up, payments go up, it becomes harder to hit this self-sufficiency rule, and it becomes very difficult to finance as a house hacker these 3 and 4 unit properties with low money down. So what's changed? Fannie Mae, one of the government organizations that regulates mortgages, is changing the rules. So now on multifamily properties, instead of being forced to go with an FHA loan if you want a low down payment, we can go with a conventional loan as well. So you still get the low down payment that you know and love from FHA, but conventional eliminates a lot of the negatives of FHA, like permanent mortgage insurance and like that FHA self-sufficiency rule. So what does this mean for you as a house hacker? Essentially, in Seattle, single-family homes with ADUs and DADUs have been highly popular, and we've seen prices go through the roof because of that. This new rule makes investing in true multifamily properties like duplexes, triplexes, and quadplexes much more affordable for a low money down house hacker. So if you're looking to house hack, definitely reach out to our team. We'd love to talk to you about the changes we see here and the strategies and tactics that this opens up. If you don't know who I am, my name is Michael Haas. I'm the lead agent over at House Hack Seattle. I own a portfolio of rental properties in Seattle that I bought through house hacking and burr investing that has allowed me to live life on my terms and do amazing things with my family, like travel to Bali, Indonesia for 3 months, where I am now. If you'd like to learn more about this specific strategy or house hacking and burr investing in general, I've got a calendar link down in the description. Book some time with me completely free, and I'd love to chat more about what we see working in the Seattle and other markets in the United States and hear more about you and your investing goals. Peace.